briefly touched above 100 in the past couple of days after we received better than expected ISM data, better than expected job openings, which are all pointing to signs of higher for longer, right? All pointing that inflation is going to potentially stay higher. People have jobs, and people are traveling and spending money. So ISM services data better than expected. JOLTS data is better than expected, and you can see that the yield has briefly today jumped above 4.7%. I think it dropped as soon as we got the initial claims. I think initial claims were slightly lower, let me see, than expected. Slightly lower. So it's kind of good news. Bad news is good for the market. Good news is bad for the market. Oh, Bill, no, I just wanted to make sure that you can hear me and you can see my screen. But looks like you can hear me. And you should be able to see the screen. So bad news, and the market rebounds, right? Because the expectation that Fed will cut rates. But if you have a good news like ISM data or job openings, right, stronger than expected data, then market doesn't like that. So today, as soon as the initial claims came, the print came, rates dropped, and the market has recovered, right? The market has recovered on that news. So that's the current trend, right? It doesn't have to stay like this way, the correlation, but that is the trade, right? S&P futures also stabilized after the print. I mean, right now kind of trading sideways, but spiders, I think, were as low as 585 and bounced back. So for now, we're trading in a well-defined range, 580 on the upside, and since this middle of December, 600, right? So 602, 580. We're going into kind of a very important data point, unemployment data, right? Hourly wages. Yesterday, one of the other reasons is what does it show you here? But the price index is a part of ISM services data, I think. Yeah, so price paid index complied by Institute Supply Manager is part of the broader, so jump 64%, 51, this highest level since 2023. Okay, so that's one of the reasons for the pullback. That the idea that inflationary pressures will stay longer, higher for longer, and market responded accordingly. For now, it's trading in the range, waiting for the unemployment data, which will come out on Friday. Tomorrow, markets are observing the funeral, President Carter's funeral. So markets will be closed tomorrow. And right now, spiders is flat, small caps off the lows, right? We were as low as 219. Again, no new signals, but off the session lows, closer to session highs. QQQ briefly turned positive, but also flat. So all eyes on Friday. And then next week, we have PPI data on Tuesday, and then CPI data. So next week we have unemployment data. This week we have unemployment data. Then we have CPI, PPI print that will influence the interest rates. And interest rates are extremely overbought. So hopefully, if there's no reappearance of inflation, rates will drop. But obviously, it opens the door to negative surprise, right? If all of a sudden PPI jumps, right, or CPI jumps, right, month over month, year over year, more than expected, that would, that would definitely put pressure, and these lows will be broken, right? So kind of make or break scenario, whether it's QQQ, which is sitting at the July breakout. So important data. Next week, I think we'll see a new direction in the market. We're either going to break below 580, or we're going to, revisit the highs at least. Today, yields pulled back from 470, extremely overbought, touched, briefly above that level. Dollar again very strong, back to the highs, 109. High yield recovered after the initial announcement from only 2 rate cuts. VIX also pulled back. It was as high as almost 20, back to 17. Value stocks are flat, QQQ slightly lower. Semis down 1%, spiders flat, small caps down 70 basis points. Silver still trending higher, energy, copper recovering. We have gas, so it looks like commodities rally. 100,000, sitting at this, again, neckline, just touched the 50-day moving average. Any questions? Bill, okay, perfect. So model predicted for today, 584 support, 595, slightly negative bias. The trend is negative. Model basically says that it doesn't see a breakdown below 580, right? But still negative trend where we could break. Look at some of the indexes this year. So materials continue to be weak. Home builders, anything that's interest sensitive and reflection of global economy, then it's down. Global materials, home builders, metals and miners, China, industrials. Stronger dollar, right? The interesting is on the there's only one signal, bullish signal in the model today on aggressive power trader or active trader. CNC, right? So health. CNC, right? So healthcare. So if the healthcare stocks and XLV in general could be one of the beneficiary, right? So pretty good start to the year in beneficiary, right? So pretty good start to the year in XLV from the oversold levels. Energy is iron, right? Could be a good kind of rebalancing. We have more exposure to the energy. All right, let's see, are there any issues? Okay. Any questions? Okay, let's review the positions. Let's see how the so we talked about energy. Oil drillers are doing well. Gold, right? Commodities having a good start for the year. Japan was still weak. India still weak. Alex is here. Okay, great. All right, so Apple, back to the 50-day moving average. Microsoft, right below 200-day moving average. So Microsoft is down below 200-day moving average. Meta. Meta is doing better, above 50-day moving average. Microsoft is below 200-day moving average. Google doing well, so close to all-time highs. So Google is strong. Netflix is relatively strong, a kind of strong pullback, which usually signals that there's more pressure to the downside. So I would keep an eye on NVIDIA. And just in general, AI stocks, right, that did well last year, right? Like Palantir, very sharp pullback in Palantir. Supercomputers, what was it? Ion Q. This is, I think, what's his, yeah, Bob's favorite, right? So down 40%, right, in 1 day. So you can definitely, you have to be careful trading these stocks because they can be very volatile, right? Elevator up, elevator down. On any negative news, right? The downgrade from the analysts, and all of a sudden the stock is down 40%. So this is where you want to be careful, either trade options where you have limited loss or hedge your positions, but this is not a good chart. So you do have a kind of people are revisiting the AI theme and pull back. We'll see if it's short term or long term, but for now you definitely have a strong move to the downside. How's Supermicro Computer doing? It's not that great. Okay. What else? So let's review the positions and then do the earnings, or review the earnings. So Amazon, I'm still bullish on Amazon. It did pull back. I have a stock position. It briefly broke through the uptrend, now trading below. It's still in this triangle, right? So next week, we're either going to revisit the highs or we're going to revisit 50-day moving average. So I think pullbacks, you can have another, 10%, 15% pullback. So this is why I think it makes sense to hedge your portfolio, and I would keep cash, right? If usually you keep 30% of your portfolio in cash, maybe it makes sense to have 40% of your portfolio in cash, right? If you keep 10% of your portfolio in cash, maybe it makes sense to have 20% of your portfolio in cash. But I would definitely raise cash because this is negative price pattern, considered to be negative price pattern. Delta Airline will earnings, right? The idea that it's going to trade between 54 and 55, or 65, and below 65 and above 55 level. So Delta Airlines 65, I think it got pretty volatile. So basically revisiting all-time highs. So if on Friday it revisits all-time highs and pushes above 66 level, right, stays at this level, then this would be a losing trade. But the idea that it's not going to revisit all-time highs. Energy, probably one of the better sectors this start of the year, one of the worst sectors in December, November. Still trading right at the 50-day moving average, right below that. So I still think more room for recover for OKE. I do have a QQQ put spread, 520, 525. Closed January, rolled it into February. It's in the money at this point. Spread, we're right at the 50-day moving average. So any negative news, and we'll revisit 500, which is kind of this July failed breakout in July. So the top of July, which is considered to be multi-months setup. So bulls want to hold this level. Wow, we have more people on YouTube than we have on GoToWebinar. It's interesting. Okay, welcome on YouTube. If you guys have any questions, please type them in. All right, so, and please hit subscribe. If you're not subscribed, hit the subscribe button. We're trying to grow our audience as well on YouTube. So thank you for watching. And you can type questions inside the chat. So that's QQQ hedge. I encourage you to hedge right now. Right? You can still be bullish on the market, but certain percentage of your portfolio would hedge either QQQ put spread, or if you're not comfortable trading options, maybe you can buy PSQ, right? Inverse ETF of QQQ or spiders to hedge your portfolio. And then I would just look in general. You know, yesterday QQQ was down 2%, right? Was your portfolio down 2%, 1%, right? QQQ is a volatile high beta. You know, if your portfolio also moved 2% or more, then maybe you're overly exposed to the technology and high beta stocks. Right? That's usually one of the issues with new traders. Their portfolio is not diversified, and you have, you know, Bitcoin, Nvidia, Microsoft, and Apple. And sometimes they diverge, but on the pullbacks, especially fast pullbacks, they move in the same correlation. So I would use this opportunity to rebalance, right? If you see that your portfolio fluctuates, you know, 2 times the spiders, then I think you're overly exposed, and you want to maybe trim some of your positions. Or you can also hedge buying the QQQ put spread 520, 525. SRE is a problem. And we have another leg down. I mean, mainly, you know, one of the reasons utilities kind of 200-day moving average. Now SRE just visited 200-day moving average. It's a pretty sharp pullback. I said if it breaks 85, I would exit, but I didn't have much opportunity to kind of down another 3% today. So at this point, I'll just wait. It's a stock. I have relatively small position, but you know, I am down, so I'm gonna wait and see when it's a. Obviously, interest rate sensitive sector, 200-day moving average usually holds. SRE had good earnings, but you know, sensitive to the interest rates. So I just need to wait and for the yield to come down. An expectation that the yield is going to trend lower. That yields are going to trend lower. So that's Tesla. What else? Sorry, SRE, Tesla. I do have a stock and a put spread. So I'm hedging Tesla, probably one of the most volatile stocks in my portfolio. It's right below 400, right? We talked about 400 as a line in the sand in terms of where the high open interest in strikes, right? If you look at the bar chart. So very large position at 400. We broke through the 400 on the NIS on the delivery numbers, hit the 50-day moving average, bounced back, and now we're trading below 400. So again, Friday we're either gonna break above 424 or we're gonna revisit the 200-day moving average. So pretty volatile stock. For now I'm keeping my hedge. So I have small position in stock and then hedge. Twilio. Looks like it's actually bouncing today. I think Twilio is doing better than most of high beta stocks. It's kind of still at multi-year high. So it's a spread, February half time, Texas Instrument and USB. Texas Instrument is a stock. It's not making new lows. It's still pattern of, at least since, you know, that decision, it's pattern of higher highs, higher lows. Semiconductors briefly broke through that overhead resistance with Nvidia, trading back to the trend line. So again, line in the sand, right? If, you know, we're either going to go to 240 on Friday, or we're going to go to 265. right, based on the numbers. Any questions? And finally, USB is a spread. February, so I have time. I close my January positions. USB Bancorp, I mean, pattern of higher lows, higher highs. Banks are going to announce earnings soon, right? Starting Monday. Next week, we'll have earnings from major banks. All right. Any questions? All right, so Price Smart announced on earnings after close. Retail specialty store. Yeah, no volume, so I can do option trade. Thursday is a day off, and then Friday. So we have a Delta airline, and we do have Walgreens Good Alliance. All right, so let's do Delta. Let's review Delta airline again. So I already have the position in Delta airline. So 65, 66, 54, 55 spread. So let's do Delta airline. Expected move October 10, sorry, January 10, before the market opens. Implied volatility is 5%. But Friday, somewhere between 5 and 7% estimated move. Historically, move 5%. Sometimes volatile, but January is usually volatile. And then you have the upside. Let's see. How about the earnings? Seasonality. Let's see how's usually Delta airline in January doing. It's usually net positive. Usually net positive. Except 2016, big move to the downside. Okay. All right. So one way to do it is, again, sell iron condors. Right, you can do long iron condor in Delta airline. Then what do they do? 54 strike. 54 strike. So you can do 54, 55, 58, 59, or you can go out to, let's see, 54. The call's 64, 66. I did, I think, $1 spread. I mean, easier would be to look at the vertical spread, right? So let's say I'm going to do bullish put spread. And leg one, what do I say, 54. Leg one is 54. So 54, 50, well, here's 54, 56. I did 54, 55. So 54 would imply a drop of 6%. All right, so let's do this here. So 54. 54 doesn't even have bid and ask anymore, so 55. So 55, let's do 55, 54, 55, 53. Very little volume. Let's see, 56 and 55. So one estimate, I mean, 5% would be expected move of $3. $3. 3 minus 62, 59. And then 56, 54. Tom, welcome. All right. I mean, it moved since Monday when I put the spread. Got a lot wider. Can get a bit of mess for whatever reasons. Okay. So 26 cents. I was able to get 26 cents, 56, 54 put right now. And the calls, okay, so 4.5. 4.5. 4.5 would be 65, 62. Let's see if there's any gamma, if any strike stand out more than others. Let's see, change. Yeah, so after 60, you don't really have. Well, I guess 55, right? 55. And then on the upside, 65. 65. I got 66. So 66.68, trying to get to 23 cents, 22 cents. Okay. So I was able to get 22 cents for 66.68 right now. But since I did Monday here, it's 65.66. So for this trade, it needs to stay below 65, below this level. On the downside, it moved a lot. So 55 is pretty, at this point, is, it would have to be below this low. So that's Delta Airline. Let's see, Walgreens Buddha Alliance. Walgreens is usually volatile as well, pretty liquid name. 15 million shares, so that's a pretty volatile name. Let's see if there's any, what's the expectation on Walgreens Alliance. So 10:10 before market opens. Trading at 9:30, one standard deviation would be you don't have a lot of option trading. I mean, there's some position at 13, some position at 750. Expected move in WBA. Let's see, WBA. Did you guys have a hard time logging in? Looks like a lot of people joined now, but we're almost done. Or was it just everybody's? Patrick, Thomas, Brad? Did you have any issues logging in or no issues? Okay. Looks like no issues. Fine. Just late. Got it. No problem. No problem. I was concerned. I mean, I'm usually late too, so. Okay. WBA. So one standard deviation move would be expected move 84 cents. Right. So about 10% on WBA. So about 10% move. 10% would be, well, 7.5. I would use that as a strike. Let's see, trade option WBA. Let's see, spread, buy to open, sell to open. Let's see what's going on with 7.5 strike. You can get 3 cents. Yeah, but yeah, it almost doesn't make sense. 750. Yeah, it doesn't make sense. Okay, so we'll skip WBA. Tilray, there's some movements in alternative harvest stocks, pretty liquid. It's dollar stock. MJ tried to rebound this year, but for now, losing all momentum as well. And that's it. So pretty uneventful. Monday is only KB Homes, so I think it's actually till Wednesday. So JP Morgan is announcing earnings on Wednesday, and Wells Fargo. So it looks like earnings season will start Wednesday, kind of full blown. All right, 241, where are we? NVIDIA is holding the 140 level, right? This is a line in the sand, very familiar pattern, similar to QQQ, where, basically stock didn't go anywhere since June, right? So usually such a long patterns of consolidation is healthy, and you have a breakout, right? We've had an attempt yesterday, reversal, so that's negative. So I still, it's still pattern of higher highs, higher lows, but we need kind of some kind of catalyst for the market to break above this level to the upside, or a catalyst to break to the downside, right? Obviously, new administration was all the tweets from Elon Musk and Trump on how the governments should be structured and taking over Greenland, and there's some interesting tweets that's causing uncertainty in the market, and Fed meeting minutes display that they're probably not going to cut rates until they see what the immigration policies looks like, what the tariff policy looks like. Are they going to be, are we going to take over Panama Canal? I mean, those are exaggerations, but still, the point remains that this is all uncertainty, right? Elon Musk tweeting, about United Kingdom, how they should run their government, and how Canada should become part of the United States. I mean, part of it is entertainment, part of it is uncertainty, right? It's uncertainty, and some people take these tweets seriously, and that causes at least short-term volatility. I don't think that will cause market to break down or rally, but perception of inflation and rising interest rates, that will definitely cause the market. And right now, market is kind of on the edge, right? It's on edge because interest rates, since the odds of red wave started to increase in October, it was just one-way trade, right? This is kind of a, and at this point, it was initially a net positive for the market, right? And I guess still, right? But we're already neutral, right? So at this point, I would say it's net neutral, the new administration. So that will be the question that needs to get resolved in the next few weeks, whether it's going to be net positive or net negative. Counter order details not showing up on Elite Trader log. Let's see. It should be here. So if you go to positions, right? If you go to positions, Bill, you should have this access, right? So you go to Elite Trade Circle, you go to positions, and you have Delta Airline, right? And I mean, if it's negative, it means I'm short. So I'm short 65 call and I'm long 66 call. So when the quantity is negative, or cost base is negative, meaning it's a short position. So I'm short 65, I'm long 66, I'm short 65, 50, sorry, short 55, short 55. Right, I should say that. It just says bit, okay. And then I'm long 54. So you should be able to see it in positions. And orders you also should be able to see it, just not today. This was orders from Monday, I believe. Right, so it basically tells you that I received a net credit of 24 cents. So if I receive a credit, then it's an iron condor, right? And you can see here it says selling 55 put, buying 54 put, right? And selling 65 call, buying 66 call. Bob is back. Yeah, I mean, this IONQ, I was listening to the news, right? I don't know if you're in that trade, but this is a wild ride, right, on the downgrade. All it is just the perceived pessimism, right? That it'll take a few years to realize its potential, just like AI, right? We're not going to realize full potential now. You could see Pelletier, IONQ, SMCI, but risk off, right? It's a risk off trade across the board, right? And same thing with Bitcoin, right? The risk off. So people are cautious, concerned, and this is mainly driven by interest rates, right? mainly driven by interest rates. So right now, I think you guys came in late. I think one thing, clearly the pattern right now, we've seen these patterns in 22 and 23. Sorry, 23 and 24, where bad news is good for the market, right? Today we had a bad news, I mean, relatively bad news, that initial jobless claims, right? They hold on a second. What's the initial job claims went down. It's actually good news, right? Initial job claims. There's something about these numbers when I read that, or ADP employment maybe. Let's see. Okay. Well, that goes for that theory. There was something negative about this because the rates dropped, right? Usually if initial claims going lower, more people working, and like yesterday, right? Job openings were JOLTS number were much higher. ISM services were much higher. So this was good news. Job openings, good news. Bad news was the price index, right? The price index was higher. Now it's asking me, but the price index when we read this was higher. So anything that's perceived that can increase the inflation, then the rates go up, and that's why we got to almost I mean, not almost, but 473 was the highest print that at least I saw. Right, and when you have bad news, I don't know if initial claims were bad, but at least it pulled back. I mean, we don't have a big rally, right? It's kind of market is flat. Spider slightly positive, QQQ slightly. I mean, we're flat for today. So tomorrow will be, not tomorrow, tomorrow is a short week. So we don't have, President Carter's funeral, markets are closed. But unemployment rate, right? Hourly wages, right? I think if unemployment rate jumps again to maybe 4.4, I think that would be negative for the market. If it stays 4.2, if it drops 4.1, I think this would be positive for the market. Okay, Bill, thank you. Of quantum stacks. I mean, the NVIDIA conference was net positive, right? They unveiled all these new chips and all the new gaming chips, and they're going to retail computing. I mean, demand is strong. There was nothing negative, right? And it rallied. But then you can see large institutions, for whatever reason, just dump the stock. Right? Could be overbought. Could be just people are concerned, right? People are concerned that we had 2-year back-to-back of 20% returns, and now the consensus we're still in the bull market, and AI is going to improve the earnings, but the uncertainty is there about the inflation, which is good because this whole concept of wall of worry, right? Everybody said that the reason market had these double-digit returns in the past 2 years because everybody thought that we're going to have a recession, right? 30% chance, 40%. Now, probability of recession, most economists put at close to 0, right? So we don't have that wall of worry to climb. So the new wall of worry is Trump, tariffs, immigration policy. So from maybe longer term perspective, I think that could be net bullish. It's obviously creating volatility short term, but long term, I think it's still pattern of higher highs and higher lows. But this move right in December, like VIX jump on 28, and there was not a big pullback, right? So you can see markets are vulnerable for high pullbacks, especially on this expiration, right? December 18, right? It was the VIX expiration, and you couple it with Powell's announcement, then less rate cuts, and you have VIX jumping to 28. It's the same setup next week. right? Next week, it's the VIX expiration. So if JP Morgan misses earnings, right, or they complain about strong dollar and unemployment data wasn't that great, you could have VIX jump to 28 again, right? What seems to be kind of not bad, but, you know, I think in the past 2 years, even last year, I think Powell did say that end of 23, Powell, I think, said there'll be 4 rate cuts in 24 and 2 rate cuts in 25. He said that in 23, basically. And they're sticking to their script. They haven't deviated it. But market participants, you know, always, you know, 6 rate cuts, 0 rate cuts, or now everybody thinks about maybe they're going to increase the rate cuts. I mean, increase the rates, right? If the 10-year is jumping to 5, well, the only way to get there is if Fed is forced to raise rate cuts, right? That's why October of 23, everybody thought they're going to increase the rates. So that's why it was at 5. But now we know they're not increasing interest rates. So why is it gravitating toward 5, right? So, you know, and that creates uncertainty in the market. Quantum stocks. Yeah, he said, NVIDIA CEO said that it will take time for. He didn't push the market by 40%, right? It's the market participants, right? You have this elevator up from 5 to 50 in short period of time. You know that all of this is gamma play, right? People are buying calls and dealers hedging. So dealers have a very big stock position. You have, everybody else has a lot of calls, and all of a sudden you have negative news, which should not cause the market to drop 40%, but you have unwinding of this trade, right? So every time you see elevator up, you have to be suspicious, right? Whether it's IONQ or GameStop or any other, you know, meme stocks, right? Because they rally on enthusiasm and on projected strong earnings, and usually none of these stocks have strong earnings, right? They usually, this is a play for the future earnings. And if all of a sudden somebody says, well, the future is longer than you think, well, then you have these elevator up, elevator down. So just every time you see those patterns, you just need to be cautious, right? If you're the first person who invests, you know, in October, okay, then you're a superstar. But if you start investing in December, you know, it could be a problem. Inflation fears is the reason rates are going up. Yes. So new administration uncertainty. You know, I was reading Wall Street Journal yesterday. Elon Musk tweeted about, you know, that there should be a new government in Britain, new government in Canada, right? So, and then Trump said that maybe we should take over Greenland and take over, you know, Pan Am Canal. A lot of it is just kind of, again, a repeat of 2016. I don't think anybody's going to take over Greenland, nor Canada is going to be the 51st state. But it's the headline news in Wall Street Journal, right? And everybody reads it, and people become nervous. They become, you know, what else is going to be done, right? You have this government efficiency administration. So it's reflected in 10-year yield, right? It's all reflected in this 10-year yield. So as long as it keep going higher, markets are going to be consolidating, or, you know, I think if we revisit 5%, markets are going to drop, you know, 10, 15% if we get to 5%. That's why I think a lot of technicians are watching 4.7, including myself, right? And we briefly touched above 470. So if Friday and then next week on expiration week, we hold this level, right? 473, 478, 490. I think market is going to pull back. So for now, I think I would keep the hedge. I think market neutral, maybe a slightly bullish bias, since especially value stocks are extremely oversold. But you need positive catalysts. So I would keep the hedges, and I would look at like yesterday. If yesterday market is down 2%, right? If market moves 2%, how much did your portfolio move, right? If your portfolio moved 2%, right, especially if we take out the 500 level, I mean, we could revisit 200-day moving average, right? QQQ could drop 10%, right? If you have kind of a additive, unemployment jumped, JP Morgan complains about strong dollar, right? And you have VIX expiration, that's a recipe for, 5%, 10% drop in QQQ. You want to make sure that your portfolio is not down 20%, right? Since you don't know, right? This is going back to trading psychology. I always do this exercise of fear of future regret, right? If QQQ drops to 480, I need to make sure that I have hedges, that I can make money on my hedges, and I don't panic. And usually I panic when I see my portfolio down 20%. And I've been doing this long enough where I don't want to see 20% down in my portfolio. So then I start raising cash, start hedging, right? So if your portfolio yesterday moved 2% because you have a lot of exposure in NVIDIA, Microsoft, IonQ, Bitcoin, well, you need to go through these rehearsal exercises, right? You have to go to say, okay, if QQQ drops to 200-day moving average and doesn't hold 500, right? What will my portfolio look like? I know 20%. Most people do not want to see their portfolio down 20%. Right? 10%, it's not pretty, but if you have cash, usually you can get excited, right? Oh, I have cash, 30-40% of my cash. I'm going to buy QQQ at 200-day moving average. But if you don't have cash or you're on margin call, well, then it's a problem. So the fear of future regret versus fear of missing out, right? Here I'm concerned that, the train is leaving and I'm the last one, right? And here I'm fear of future regret. So a lot of it is trading psychology and kind of how well do you know yourself. And you do this by negative rehearsal exercise, right? So usually I close my eyes before market opens and just say, okay, what if in the next 2 weeks QQQ is 480? Right? Nobody can tell you it's not going to be there, right? Maybe that's not the core case. I think core case, we're going to hold this level. But I don't know, right? So I could be bullish on the market and think we're going to do this, but I need to consider this scenario just for the sizing, right? Position sizing. So that's most important. All right. Any other questions? What time is it? 2:59. All right, guys. We have a day off tomorrow, so I will do the opening bell on Friday, and Keith will do the closing bell. Let's all try to get here at least at 4:05. I know I'm at fault too, but today we had few people, and I was worried about technologies. The API doesn't work, registration doesn't work. So that'll be great. Otherwise, I'll see you on Friday. I think next 2 weeks are going to be extremely important. Earnings, VIX expiration, unemployment, CPI, PPI data. The market is sitting on the edge, right? So we either have to have a positive catalyst, and then the market breaks to the upside, or we have a negative catalyst and the market breaks to the downside. All right, Renata, Bill, Renata, Patrick, Brad, Fred, Bob, Alon, Michael, Steve. Thank you guys for participating. Thank you on YouTube. You guys are awesome. What do we have now? Oh, most people left already. I've been talking too long. But anyway, we had a lot of people on YouTube at some point more than go to webinars. So thank you, and we'll see you guys soon. Take care. Palantir. We have kind of this big move. Obviously, 50-day moving average, 65 on Palantir. Right, I think we talked about 65 strike. So you do have a 65 strike. You have 60 right after that. But 65 strike is 50-day moving average. You have some position. If 65 doesn't hold, the next levels are going to be 60 or 55, right? 60 or 55. A lot of it I would watch, obviously, QQQ, right? As long as the QQQ is above 500, I think Palantir is going to be fine. But if QQQ drops below 500, if the interest rates jump again above 473, 480, then, you know, it doesn't matter what stock. Palantir is going to sell out. NVIDIA is going to sell out, right? Continue to break to the downside. NVIDIA high open interest is a 140, right? And this is June high. So 140 is the line in the sand. We already been below that level yesterday and today, and for the past few weeks. So if we drop below 20-day moving average, which is 136, that probably opens the door to 130. And 130 is a long-term strong support. So if NVIDIA drops below 130, then 120. But you do have kind of this large medium, long-term to medium-term support at 130. Thank you, Renato. All right. Thank you, guys. Take care.